Hi, this is Danielle.
And Henry.
And welcome to the Simpler Options free video for Friday. Happy Friday, everybody. We're in studio today, and we're going to be talking about a short setup that we have in XLF and JPM. Henry, what can you tell me about why you like this setup?
Well, some of the first things that come to mind with JPM really come from the weekly chart, and it's interesting to share both perspectives in this because off the weekly and given enough time, I think JPM is going to head up into new highs. There's a little bit of a sharp reversal. You've seen a big rally up off the lows, so long term, I think you head up into those extensions. But right here, right now, and especially into next week and maybe for the next 5 or 7 days, I think the daily chart suggests that we might pull back. So I would prefer to look at some counter trend opportunities, and then once we get the pullback, then I can look at trying to go long again.
Yes, absolutely. I love the idea. That's exactly in line with what I'm looking at here on the charts. I mean, basically, you know, there's been a really nice rally in the banks the past week or two, but essentially, you know, we're in a situation with the S&Ps where we're also extended. The banks also look extended, and I think it is a really good opportunity for a counter trend short. So let's go ahead and look at the charts, and we'll show you what we're looking at. So looking at XLF, of course, this is our financial ETF, and the main thing that I notice here is that we're up against major symmetry resistance. So if you look at these last rally swings here, 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 and here, right now, I mean, yes, we've had a nice rally, but this has created a lot of resistance overhead, and you can see that we're pausing right here. We're also starting to show a ready, aim, fire, sell signal, which is a pretty good signal that resistance is actually stable. What would you have to say about that?
Well, I definitely agree with the resistance through symmetry and really just the basic idea that we're due for a pullback here. These types of trades won't be for everyone because for some, and especially like a beginning trading plan, I usually suggest trading with the trend, which would say that you just stay patient in JPM and you wait for the pullback. But if you're willing to take some counter trend opportunities, then all we're trying to say is it's doing something that it's done before, right before it had a decline. So we're just trying to mimic those movements again. And I'm with you on the potential for a pullback.
Okay, so let's go ahead and talk about the symmetry in time as well, because I know that, you know, you had some symmetry in time on, was it on XLF and JPM or just JPM?
Well, it came up a bit more cleanly in JPM. So if we flip over and we look at this chart, it's really just basing the idea, same thing as price, just projected along a different axis. So this comes in a little bit more cleanly if you're looking at the weekly chart. And I always like to look at the swing that precedes any type of a major shift. So here it's just the idea that this was the last good bullish push that we had, and it was for about 4 weeks. And then you project that out in time, which would suggest into today the potential of that timing high. Now it's a little bit strong today, but somewhat counterintuitively, this is what you want to see. You want to see strength up into the timing, and then this being an area that we could pull back from. So I like it a little bit more in JPM, and this is how I have chosen to play it, and we'll see if we can get a little bit of that pullback as we start heading into next week. Once we get back down here into our moving averages, that's when I will look to shift gears and try to buy it again.
Okay, great. And can you talk about a little bit why you would want to play XLF versus JPM or JPM versus XLF?
The general idea is that if you would like to have a little bit more calm exposure or a little bit kind of an easier ebb and flow to it, then you might come in and trade XLF because this is going to generally have less volatility than individual names. So if you want something that's a little bit more calm, reflects a little bit more of the overall sector, then you would play it through XLF. If you want a little bit more direct exposure and you're really trying to play, you know, something that could have more of a direct move, then I would go down to the individual stocks, and JPM would be one of the first ones to look at.
Okay, great. Do you want to go ahead and show me the ratio spread that you were thinking about putting on here?
It's a little bit of an interesting environment to do these. I mean, admittedly, implied volatility is not that high, but the reason why I'm showing it as a ratio spread is because it's a more accommodating way to approach these ideas rather than just straight up short calls. You know, in this type of environment, I'm not really wanting to come in, as we've discussed, I'm not wanting to buy a whole lot just yet. So you're looking at it with the idea of saying, where does the symmetry come in? So let's just say 117 for the sake of discussion here. We're going to come out about 21 days and then look at selling 2 of the 117 calls just happens to be, that must be your default quantity. So
Yep.
it queued up two of them by default. And then if you could hold control on the keyboard, then you'll come in and buy, and then you just have to adjust your quantity. So since you do these that way, that's fine, but you just come in and you buy a smaller amount than those that you're selling. The idea is that the entire trade goes for a credit. Now you may look at it and think, well, a 30-cent credit is kind of small, but that's not all you can make on the trade. If you flip over into the Analyze tab, you can see that the peak profit would actually land you closer to about $2.50. So if you rally into that short strike, that's fine. Now if it exceeds it, that's where you want to make sure you've got your position size correct. But I like these types of ideas because if you do have some type of a big correction, there is no downside risk. You have some leniency to the upside, and I think that's the current trade for JP Morgan.
Excellent. I love that take. I mean, for me personally, I was just looking at a longer dated puts on XLF. I think that's a pretty simple way to play it, but I love the ratio spread take, and thanks for sharing that.
Anytime. Lots of ways to get there.
Thanks so much for joining us. Thank you, Henry, for being in studio with me here today. And we hope that everyone has an excellent rest of their weekend, and we'll see you on Monday. Happy trading.
Thanks.